Good evening, friends. I'm back with a wonderful session today. The type of mutual fund. So, hope you all remember that what we have discussed yesterday. If not, I will revise it again. So, yesterday we discussed about the types of the mutual fund, how many types of mutual fund are there, and we discussed about equity mutual fund and debt mutual fund. Right? So, what exactly the equity fund? What is the debt fund? So, if you want to more detail, watch it my yesterday video. And I will not take much time and will start with my today's topic, the type of mutual fund and the remaining types of mutual fund. So, industry or sectors funds. These mutual funds focus on a particular industry, such as technology, oil, gas, aviation, or healthcare. For example, investors who want to exposure to gain by a companies like a Google and Apple could put money in a technology funds. Ownership in a different sector fund can help diversify your portfolio. So if one industry is hit hard, like the busting of the dot com stock bubble in 2000. Hope you remember that bubble dot. Those losses can be offset by gains in other sectors. Growth and value funds. The investment style of the funds in another mutual fund differentiation. Growth fund, as the name suggests, seek stock that fund manager believe will have a better than average returns. Value funds looks for a companies whose stock is undervalued by the market. So next is a bond fund. So what exactly the bond fund? If you remember that your father, your uncle almost invest the money in the bonds. Time to time, it's declared by the government of India. So bond funds are the most common type of fixed income mutual fund, where, as the name suggested, investors are paid a fixed amount back on their initial investment. Bond funds are the second most popular mutual fund type, and this is a very familiar and common in the government employees. So, according for Bar, what about one of every five funds on the market, according to ICI? Rather than buy stocks, bond fund invest in government and corporate debt, considered a safer investment than stocks. Bond funds have less potential for growth than equity funds. Just as the advisors say equity funds favor the young investors nearing retirement, should have more bond funds in their portfolio to protect their nest egg while earning more interest than sitting that cash in a bank saving account. Because if you will put some amount in the your account in your saving account, you will not get the any return and interest. It is just you are keeping your money for your satisfaction. That's something amount we have handy. So if something goes wrong, then we can utilize. But if you want to know about the power of compounding, and so you have to invest your money, and you want a double and triple your money, so you have to spend that money in a such kind of mutual funds and the bond funds as well. So bond funds we have a time to 1 year, 3 year, 4 year, 5 year. So there are so many bonds are available. So then you can check your desire, and based on the desire you can invest on that bond. So but keeping the money in saving account is not a good idea. Money market fund. Money market mutual fund are fixed income mutual fund that invest in a high quality short-term debt from government, bank or corporations. Example of assets held by these funds including US Treasury certificates of deposit and commercial paper. They are considered one at the safest investment and make up 15% of the mutual fund market according to ICI. Next is the balance fund, also known as a asset allocation fund. These investments are a combination of equity and fixed income funds with a fixed ratio of investments such as a 60% stock and 40% bond. 60% stocks, 40% bond. So the best known variety of these funds are target date funds, which automatically reallocate the ratio of investment from equities to bond the closer you get to retirement. So the purpose of to for invest money in the balance fund that you will get good amount when you will get retired. Other mutual funds. So index funds. An index fund is a type of a mutual fund whose holding match or track a particular market. A particular market index such as the S&P 1500 500. Index funds have exploded in popularity in recent years thanks to the rise of a passive investment strategy, which over time typically earns better return than an actively managed approach. Like equity funds, index fund can vary on a company size. So large company, small company, and mid-range company. Specialty and alternatively fund. But tomorrow I will let you know this topic in the depth that how to invest in the index fund. So note it down from your side and mention in the chat window and remind me for tomorrow. So then I will do that. I have also noted down in my notepad. But tomorrow I will cover this how to invest in the index fund. Specialty and alternatively fund. This catch all category of funds included hedge funds, managed future, commodities, and real estate investment trust. There is also a growing investors' interest in corporate socially responsible mutual fund, which avoid investing in controversial industries like tobacco or firearms and instead focus on funding companies with a strong environmental and labor practice. So this is about the type of the mutual fund. Hope you have understand. And before investing your money in the stock market, you will think two and three times. Okay, where I am giving him money and what is the purpose for invest the money in the market. If your purpose is clear, then you will get a benefit for that one. If your purpose is not clear, if suppose I have a vision to my kids uh, get a gold for our country, so for that he need to go to for foreign country and do some practice. And for that practice and all other things, if I will calculate, I need 10 lakh, 12 lakh, 15 lakh approximate, right? For my dream. So my goal is clear, purpose is clear, and accordingly, I need a good result. I need to take a risk as well. So, but time frame is also there. Next 10 year, I need that kind of money, or 5 year, 10 year. I need to invest more money as well as a time constant. So I will get a good return as well, 30%. So I will search it out. Okay, what the mutual fund is good in the market and in the previous years, how much they have produced a good result for the investors. Based on that, I will invest my money. And when my purpose and goal is clear, then I will not use that money, because I will be more worry when I will withdraw that money from that mutual funds. I need to think twice. I will think twice and thrice before withdrawing, before applying for a withdraw that money. Because otherwise, my goal and my purpose will not be fulfilled. So if I will lose that money, I will be failed on the other side. So balance is there. So you have to make the purpose and goal to make this balance for investing your money. When you will know the reason for investing the money, then you will not withdraw the money. When you will keep that money in your mutual fund, direct mutual fund, not for the regular fund. I will discuss this point as well. Direct, what is the direct mutual fund? What is the regular mutual fund, and how we can apply in the direct mutual fund. That will help you a lot, and it would be easy to manage as well, and no need to make an Excel sheet. Otherwise, if you will go for a direct, your uh, different just like Kotak Mahindra and ICC Prudential, Tata and others, Nippon, then you have to make a Excel sheet and SIP every month. We have to calculate how much you have investment. So some manual work will be in place. To avoid that, you can open an account in the mutual fund utility. So in detail, I will let you know tomorrow how you can apply for the what is the mutual fund utility, and how you can apply for that one, and how you will get a benefit for that one. So with that, I will not take your much time, and I am wrapping my call today. So we'll meet you again with a new topic. Keep watching, keep subscribing, and spread my channel with your colleague and loved one as well. They will get in a more benefit as well. Thank you. Bye bye. See you. Meet you tomorrow morning. Bye bye.